Hey guys, what's happening? Dan Darrow here with another Options and Play video update. So today's video is going to be a little bit different. To wrap up the week, I am going to talk about one trade or one position. It's a couple trades within that one position. So one position that worked well, but also kind of didn't. So what I mean by that, it was closed out this week for a bad exit, and let's kind of revisit the idea and see what we can learn from the trade. So most lessons in trading, unfortunately, either start by losing money or leaving a lot of money on the table, and this is one that falls into that latter category. So it's definitely one trade that we wish we could have back. And first things first, it actually worked out really well on the earnings report. So that's why we were involved with this in the first place. Uh, the stock went into earnings. You can see it down near monthly support. This was a stock that it was a little bit more. It was a little bit more risky in the sense that it had gotten hit last quarter when reported, and it wasn't acting particularly great, but the numbers were decent. The sector, it's a software stock, so the sector was acting great, or it has been acting great. And in terms of evaluation, it was actually a little bit undervalued. Actually, not a little bit, quite a bit undervalued compared to the average revenue multiple in the group. So it was one of those setups where if the report was good, there could be a pretty big revert to the like sector trade. So could see a pop, could get back up into like the top of its range. Where like the software stocks were just kind of grinding higher, and plus there was a pretty interesting technical trade because 20 had been a relatively large area of resistance, 20 to 21. So there was kind of like a few things going. I mean, like undervalued name in a strong sector, technical. And for the option wise, we wanted to go with something that was a little bit further out of the money, but also like reasonably could be in play. So it was the September 20 call was the trade into the report, and it actually good number popped, and like the first day it went through 20, so we could really roll up like right away, and so the first position was rolled up into a September 2250 call to see if it kind of kept extending, and then nicely it did, and it allowed us to roll up the 2250 call to the September 25 call, and that 25 call. So the September 25 call was the third trade of the original position. So it was the September 20 was closed, rolled up to September 2250, which was closed and rolled up to the September 25, and that's kind of the position that we're going to talk about. So that September 25 call. So there was already some money locked in on the trade, and now we're sitting in the September 25 call and waiting to see if there was a real major breakout. You could see like the stock was hanging above multiple time frame resistance. So we wanted to see if it extended up into like the mid 20s. But then basically after like that initial run, things kind of like cooled off. Momentum basically, I don't want to say it fell apart, but momentum just dried up. It had one decent move to the back 2250, 23 area, stalled, and then this is when things got a little bit more volatile. It's like the day right before Cloudera, which is a pretty close related peer, was supposed to report. Software stocks just kind of got run over. Tech had a pretty heavy down day, and you could see it had a really sharp move, broke all near-term moving averages, got down to the 50-day moving average, and almost it tested the gap from the earnings report. All in really no news. I mean, it was just like sector weakness, sector selling. What happened was peer Cloudera, which we also had a position in, beat on earnings, and it kind of knocked it right back up to where it was. So that that 2 day move was a tough one. First, because there was some technical damage done one day, and then it popped right back the next day. So you know, typically when you see like those wide ranging bars, it means a lot of people caught off guard, a big drop to a big rally, uh, and for us, uh, you know, it was tough in the sense that the move like sucked a lot of implied volatility out of that September 25 call. The big drop down to pennies, and even though it popped back, it wasn't enough to really get the stock moving to the top of its range, or b like a potential catalyst was removed, and so like the implied volatility like was kind of like drifting lower, and we knew expiration was coming. So kind of like the lack of direction at this point. So after like this second day rally here, we were more interested in recovering premium at that point than thinking of a major breakout. So what we were watching for, see if there's any continuation, and we could get some more premium back out of like the trade of the September 25 call trade. So we were just kind of waiting and seeing if it built on it, and it did. So the following day continued, and then started to build from there, and actually it broke out. You can see it had a really nice breakout here, and it started to take off. So we were patient, holding, and then on the fifth day up, which is here, the stock was extended. It was about 10% above the previous high. And options were short-term expiration. We figured it was a good area to close out the remainder of the position overall. Especially with like expiration only like less than 2 weeks away. So the September 25 call was closed out here, and what happens? It blows through 25, and it continued up past like 26. So. Closing out that September 25 call at a small, or at a loss. If we held, it could have ended up being like the third like big move for the position like overall. The 20 call was good, the 2250 call was good, and if we'd actually held, and then the 25 call on top of it could have been good. Could have sold it, when it rallied above 26. And it. To be honest, it's just really frustrating because we were patient with the trade, sat in it for a few weeks. We liked the potential, and it like the way that it moved. It was like the sharp drop to the sharp pop. It changed the mindset of seeking a breakout to premium recovery, and that's something that could have been prevented. And why I say that is because typically when we roll, we try to stick with either the original time frame or possibly buy more time for the next position. So, when the first call was rolled up to the September 2250 call, that's fine. You're stuck with like the original time frame. But then when it was rolled up to the 25 call, that's the point where the trade was extended. It was up 5 days in a row. So in our minds, we should have been thinking, instead of buying the same time frame, the stock is probably in need of a pullback or a pause or consolidation, and instead of going with the same time frame, we probably should have bought more time. So that third roll should have probably been October expiration. And why that changes things is because then instead of when you had this move where you're thinking, okay, premium recovery, if you're in October, then you're thinking like, okay, there's still over a month left until expiration, and you could be more patient with it instead of thinking, okay, expiration's looming, you need to get the money out of it. You're thinking, okay, this is setting up perfectly, and there's really no reason to exit here, right? So that's why I feel like there's it was the HDP had some good and had some bad. So it was good in the sense that we liked the setup. and it worked out really well. It was bad in the sense that it could have actually, maximized the trade even more, and it really comes down to the idea of that trade management, which is something that we can't stress like enough. It's like catching a good trade is great, or if you're betting that the stock is going to break out and it does, then you got the direction right. But then when it comes down to it, is trade management, and it's like maximizing the move. So yes, there was good here, but there's also ways to get better, and that's what we're always trying to work at. So I hope that was helpful to you guys. A little bit different video for Friday. Uh, some of you asked questions. There was a question about trade management. So and I kind of wanted to like get into it, and I thought this was a good way to do it. So definitely reach out. Love to hear from you. Like I said, if I can incorporate it into a video, I'll try to do that. Have a fantastic weekend, and I'll talk to you guys all next week.